Welcome back to BullionIQ, everyone. I hope you're doing well today. If you're here because you care about smart money moves, real crypto utility, and what's actually happening behind the scenes in this market, then you're in the right place. Today's update is a big one because we just heard several major statements from Ripple CEO Brad Garlinghouse that could shape how XRP, regulation, and institutional crypto adoption move forward. These are not hype clips. These are strategic signals, and once you understand them properly, the bigger picture becomes very clear. Before we dive deep, let me set the stage for why this matters. Right now, the crypto market is not driven by memes or noise. It's being shaped by regulation, institutional interest, and real-world financial integration. XRP sits right at the center of that conversation. What Brad Garlinghouse shared touches on regulation clarity, XRP's role inside Ripple's ecosystem, and how large financial players are quietly positioning themselves. This is the kind of information that long-term investors pay attention to, not traders looking for quick pumps. If you appreciate these kinds of grounded research-based updates, make sure to show some love to the channel. Drop an X in the comments, hit the like button, and stay locked in because BullionIQ is about cutting through emotion and focusing on facts. Now let's start by talking about the regulatory side because everything else builds on that foundation. One of the biggest talking points right now is the Clarity Act. There was a small but important shift recently. Banks have shown limited openness to exemptions, but only if rewards are strictly tied to transactions. On the other side, crypto firms are pushing back, saying that rewards and incentives are basic platform features. From their point of view, banning these features doesn't protect consumers. It protects traditional banks from competition. This tension is exactly why regulation has moved so slowly. What's interesting is that the White House has now stepped in more actively. Both sides are being pushed to finalize compromise language by the 1st. That tells us something important. This is no longer just talk. The discussions are becoming more focused and more productive. While there is still no final resolution, the tone has changed. Instead of posturing, both sides are now trying to solve the issue. That alone is progress in Washington terms. This is where Brad Garlinghouse's perspective becomes extremely valuable. He's not commenting from the outside. Ripple's leadership is directly involved. Ripple's chief legal officer was at the White House during these discussions. That means when Brad gives a prediction on the Clarity Act, it's informed by real conversations, not speculation from social media. Now let's shift to adoption because regulation means nothing without real use cases. Ripple and Aviva investors recently announced a partnership aimed at tokenizing traditional fund structures on the XRP ledger. Aviva is not a small player. It's one of the largest asset managers in the world. When firms like that start tokenizing assets, they are not experimenting for fun. They are preparing for the next phase of financial infrastructure. This is a major signal that the XRP ledger is being taken seriously as a platform for real-world finance. Ripple's role here is not just technical support. It's part of a broader strategy to bring real utility to the ledger. Tokenization, liquidity, and on-chain finance are no longer future concepts. They are actively being built. Another important development that flew under the radar for many people is Ripple's recent comment letter to the Federal Reserve. Ripple proposed a reserve bank payment account prototype. This would potentially allow qualified non-banks like Ripple to hold stablecoin reserves directly at the Fed. If something like this ever moves forward, it could reduce counterparty risk for assets like RLUSD. To be clear, this is just a proposal. There is no approval yet. But the fact that Ripple is even participating in this conversation shows how seriously it is being treated as a financial infrastructure company. This is why comments from people like Ashish, the CEO of Evernorth, matter. He recently said that the XRP ledger is turning into more than just a payments network. It's starting to look like full financial infrastructure, combining liquidity, tokenization, and on-chain finance in one place. That is exactly the direction institutional finance is moving. All of this sets the stage for what Brad Garlinghouse said next. He made it very clear that XRP is the North Star for Ripple. Everything Ripple builds, whether it's payments, custody, treasury tools, or stablecoins, is designed to drive utility, trust, and liquidity around XRP and the XRP ledger. This is not accidental. This is a long-term strategy. Let's now go deeper into what Brad Garlinghouse actually said and why his words carry weight in this phase of the market. When Brad talks about XRP being the North Star for Ripple, this is not marketing language. This is a strategic declaration. He clearly explained that every major product Ripple is building is designed with one core goal in mind, which is increasing real utility, trust, and liquidity around XRP and the XRP ledger. That distinction is critical because many crypto companies build products that are disconnected from their native assets. Ripple is doing the opposite. Brad explained that whether it's Ripple Payments, Ripple Prime, Ripple Treasury, Custody Services, or RLUSD, all of these offerings are built to strengthen the role of XRP at the center of financial infrastructure. For example, Ripple Payments is focused on improving cross-border settlements where speed and liquidity matter more than speculation. Ripple Prime uses XRP for collateral and lending, which directly ties institutional activity to the asset itself. Ripple Treasury enables payment flows around XRP and RLUSD within treasury management systems. These are not retail-focused gimmicks. These are enterprise-grade tools designed for banks, funds, and large institutions. What stands out here is consistency. Ripple has spent years saying that utility will drive value, not hype. Brad's comments reinforce that this has not changed, even after regulatory pressure and market cycles. In fact, Ripple seems more focused than ever. When he says XRP is at the heartbeat of Ripple as a platform company, he is telling you exactly how they see the future. XRP is not an add-on. It is the foundation. Brad also mentioned that we will hear more details from Monica Long, Ripple's president, about these initiatives. That tells us there is more coming, not less. It signals ongoing expansion and deeper integration of XRP into financial products. This is how institutions move. They don't announce everything at once. They roll things out methodically. He also briefly referenced the Aviva investors announcement again, which is important. Tokenization of traditional assets is one of the biggest narratives in finance right now. When large asset managers tokenize funds on the XRP ledger, it validates the technology and the regulatory positioning Ripple has been fighting for. It also shows why clarity and regulation is so important. Institutions need legal certainty before they move serious capital on-chain. That brings us directly to the Clarity Act. When Brad was asked whether he thinks it will pass this year, his response was honest and revealing. He openly acknowledged that he is an entrepreneur and that optimism comes with the territory. But he didn't stop there. He emphasized that Ripple has been very close to the process. This is not guesswork. This is based on direct involvement at the highest levels. He expressed disappointment and frustration when progress stalled, especially when the Banking Committee paused movement on the bill. That reaction matters because it shows Ripple is not passively waiting. They are actively engaged and invested in getting this done. Brad pointed out that there were constructive conversations at the White House aimed at bridging the gap between banks and the crypto community. That phrase, bridging the gap, is key. Regulation is no longer framed as crypto versus government. It's becoming a negotiation between traditional finance and new financial technology. Brad stated that the markup proposed by Senator Tim Scott had overwhelming support from the crypto community and significant backing within banking circles as well. That's not common. Usually those two sides are far apart. The fact that both showed support suggests that the framework itself is not the problem. Timing and political alignment are. Then came the most important part of his statement. Brad gave his personal probability. He said there is a 75% chance that by the end of April, the Clarity Act will be not only back on track, but very close to passing. That is a bold statement. He did not say maybe. He did not say eventually. He put a timeline and a probability on it. For someone in his position, that is a strong signal of confidence. If that clarity arrives, the implications are massive. Regulatory clarity does not just benefit Ripple. It benefits the entire XRP ecosystem. It unlocks participation from institutions that are currently waiting on the sidelines. It reduces legal risk. It allows products like custody, lending, tokenization, and payments to scale without fear of sudden enforcement actions. Brad then zoomed out to the bigger vision. He emphasized again that Ripple's reason for existence is driving success around XRP and the XRP ecosystem. This is a crucial line. Ripple does want to be a successful company. It wants to build products customers love and will pay for. But those products are built in service of the XRP ecosystem, not separate from it. That alignment is rare in crypto. He also touched on the idea that there could be a trillion-dollar crypto company in the future. He said he has no doubt about that. More importantly, he said Ripple has the opportunity to be that company if it executes well in partnership with the XRP ecosystem. Notice the wording. Partnership. Ripple does not see itself as above the ecosystem. It sees itself as part of it. One of the biggest mistakes people make in crypto is confusing short-term price action with long-term value creation. Brad Garlinghouse's comments were not about tomorrow's candle or next week's pump. They were about building infrastructure that can support global finance. That difference changes how you should interpret everything Ripple is doing. For years, XRP has been one of the most debated assets in crypto. Some people focused only on price suppression narratives, while others dismissed XRP entirely because of regulatory uncertainty. What often got lost in the noise was the actual strategy. Ripple has been quietly positioning itself where regulation, institutions, and real-world finance intersect. Now that positioning is starting to show results. When Brad talks about utility, he's talking about something very specific. Utility means XRP is used as a bridge asset. It means XRP is used for liquidity, It means XRP is part of treasury flows, collateral structures, and settlement systems. Utility is not about retail hype. It's about solving problems that traditional finance actually has, like slow cross-border payments, high costs, and fragmented liquidity. This is why institutional-grade products matter so much. Custody, treasury management, lending, and tokenization are not exciting topics for social media, but they are exactly what large financial players care about. When Ripple builds these tools with XRP at the center, it creates demand that is not driven by speculation. It creates demand driven by necessity. The Aviva Investors partnership is a perfect example. Tokenizing traditional funds on the XRP ledger is not about experimenting with blockchain for fun. It's about efficiency, transparency, and programmability. Once assets are tokenized, they can move faster, settle quicker, and integrate more easily with other financial systems. If that infrastructure runs on the XRP ledger, then XRP becomes part of the plumbing of finance. Another key point many people miss is timing. Markets often move before the public understands why. Regulatory clarity, even partial clarity, can unlock years of pent-up demand. Institutions don't wait for headlines. They prepare quietly. They build internal frameworks, test systems, and line up partnerships. By the time retail notices, a lot of groundwork is already done. This is why Brad's confidence in the Clarity Act matters. A 75% probability by the end of April is not just optimism. It reflects momentum. It reflects the fact that conversations are happening at the highest levels. Even if the final version of the act is not perfect, clarity itself is what matters most. Markets can adapt to rules. They can't adapt to uncertainty. Another important layer here is how Ripple views its own success. Brad was very clear that Ripple wants to be a successful company, but not at the expense of XRP. Ripple's success is tied to the success of the XRP ecosystem. That alignment reduces a major risk that exists with many other crypto projects, where the company benefits regardless of what happens to the token. Brad also hinted at future possibilities without going into detail. He mentioned speculation around things like a FedMaster account and said there are things Ripple may do in the future that he's not ready to discuss. That's intentional. Serious companies don't announce everything before it's ready, but even mentioning those ideas tells you where Ripple is aiming. It's aiming to be part of the core financial system, not just an external service provider. This brings us to the idea of scale. Brad talked about the possibility of a trillion-dollar crypto company. That sounds extreme to some people, but when you think about the size of global finance, it's not unrealistic. Payments, liquidity, custody, and asset management are multi-trillion-dollar industries. If even a fraction of that moves on-chain, the platforms supporting it will be enormous. XRP's role in that future depends on usage, not belief. The more XRP is used for settlements, collateral, and liquidity, the more valuable the network becomes. This is network effect economics, not speculation. And network effects don't happen overnight. They compound slowly and then suddenly. It's also important to understand that this does not mean a straight lineup. There will be volatility, there will be pullbacks, there will be frustration. But infrastructure plays are measured in years, not weeks. Ripple has survived regulatory attacks, market crashes, and public skepticism. It's still here, still building, and now gaining regulatory and institutional traction. For the XRP community, this moment is about perspective. Instead of reacting emotionally to every price move, it's about watching what institutions do. It's about tracking adoption, partnerships, regulatory progress, and product launches. Those are the signals that matter. It's time to put this into the broader context of the crypto market and the financial world. XRP is not just another token. It sits at the intersection of technology, regulation, and institutional finance. Most cryptocurrencies live primarily in speculative spaces. XRP, however, is being actively positioned as a utility-driven asset that large financial institutions can actually use. That difference is subtle but enormous when it comes to long-term growth potential. One of the most important takeaways from Brad's comments is how Ripple approaches regulation. Too many people in crypto think regulation is a barrier. Ripple treats it as a framework to enable growth. They are actively engaging with the White House, the Federal Reserve, and Congress to make sure that XRP and the XRP ledger can operate legally and efficiently. By helping shape regulation, Ripple reduces uncertainty and opens doors for institutional participation. When you see partnerships with firms like Aviva Investors, you can immediately connect the dots. Regulatory clarity plus utility plus institutional adoption equals a stronger foundation for XRP. Another critical point is the role of liquidity. XRP is not just being positioned as a settlement token, it's being positioned as a liquidity bridge. That means XRP can move value between currencies and financial systems quickly and with lower cost. For banks and large firms, this is a massive improvement over traditional correspondent banking systems, which are slow and expensive. The more XRP is used in these processes, the more demand there is for the token itself. Unlike tokens that rely purely on hype cycles, this is real usage that creates a tangible value proposition. Brad also emphasized that Ripple's product strategy revolves around integrating XRP into every aspect of its infrastructure. Ripple Payments, Ripple Prime, and Ripple Treasury are not separate experiments. They are part of a unified ecosystem built around XRP. This is a big differentiator. Many crypto companies launch multiple products, but the token itself is often an afterthought. With Ripple, the token is at the heart of everything. That alignment between corporate strategy and token utility is rare and extremely important for long-term investors. Looking at the market from an institutional perspective, there's another layer of significance. Institutions need safety, efficiency, and predictability. Products like custody services, tokenized funds, and treasury management tools allow them to use XRP without taking unnecessary risks. Ripple isn't just talking about this. It's building these tools and actively engaging regulators to ensure compliance. This is why Brad's confidence in the Clarity Act is so meaningful. Once legal frameworks are clear, large firms can deploy XRP at scale, which could drive adoption faster than retail-driven speculation ever could. We also need to understand the multiplier effect. When XRP is used as a bridge for payments, collateral, and liquidity, it becomes part of multiple financial layers simultaneously. Each transaction, each settlement, each tokenization event adds network value. Unlike a meme token that spikes and crashes, XRP's growth compounds as more institutions integrate it into their systems. That's why Brad mentioned the possibility of Ripple becoming a trillion-dollar crypto company. The scale of real-world financial infrastructure is massive, and XRP is positioned to be a core part of it. Another key insight from Brad is Ripple's ecosystem mindset. Ripple's goal is not just to make money from its own products. Its goal is to ensure the overall XRP ecosystem succeeds. This is subtle, but crucial. The company aligns its incentives with token holders and users rather than acting in isolation. Every product, every partnership, and every regulatory push is designed to strengthen XRP's position in the broader financial system. Finally, this approach provides clarity for investors who are tired of volatility and hype. It allows you to focus on signals that matter: regulatory progress, institutional partnerships, adoption metrics, and utility-driven product development. These are leading indicators of value creation. Price alone is a lagging indicator, often disconnected from the real story. By tracking adoption and infrastructure growth, you can better anticipate long-term trends rather than reacting emotionally to short-term swings. Brad Garlinghouse's insights and XRP's position in the broader financial ecosystem. It's time to look ahead and explore what this could mean for the next 12 to 24 months. When we try to forecast XRP's potential, it's crucial to separate hype from structural drivers. The catalysts for adoption are already in motion, and they go beyond simple price speculation. They are built on real-world integration, regulatory clarity, and institutional demand. The first and most immediate potential catalyst is the Clarity Act. Brad's prediction of a 75% chance for progress by the end of April is more than a guess. It reflects the conversations happening behind closed doors at the White House, the Federal Reserve, and with banking committees. If the act passes or even moves forward significantly, it will create legal certainty that institutions desperately need before they deploy capital into XRP-related products. Regulatory clarity acts as a green light for mainstream finance to move from observation to action. In practical terms, this could mean more banks adopting Ripple's settlement solutions, more tokenization projects on the XRP ledger, and more liquidity flowing directly through XRP. The second catalyst is institutional adoption and partnerships. Ripple's collaborations, like the one with Aviva Investors, are early signals of a broader trend. Traditional finance is coming on-chain. Large asset managers, corporate treasuries, and global funds are exploring XRP not as a speculative play, but as a tool for operational efficiency. As these projects scale, they will increase the real-world demand for XRP, which is a fundamentally different driver from retail-driven hype cycles. When utility meets scale, token usage compounds across multiple layers of finance, from settlement to collateral, to tokenized products, to treasury flows. Liquidity is another key factor. XRP's design as a bridge asset means it's inherently useful for moving value quickly and at lower cost. Unlike other assets that rely purely on speculative trading volume, XRP benefits directly from transaction throughput in real financial networks. As more institutions integrate XRP into payments, lending, and tokenized products, its network effects will intensify. Each new use case creates additional demand, reinforcing the token's position at the center of Ripple's ecosystem. Another important element to consider is infrastructure and products. Ripple is building end-to-end solutions that make XRP indispensable. Ripple Payments, Ripple Prime, and Treasury products are not experimental. They are operational tools designed for institutional needs. The more Ripple's technology is embedded into banking and treasury workflows, the more XRP becomes a necessary component rather than an optional asset. This creates a long-term moat, something few other crypto projects can claim. We also need to factor in market psychology and perception. XRP has historically been undervalued compared to its adoption potential, largely due to regulatory uncertainty and retail speculation dominating headlines. As clarity emerges and institutional usage increases, market perception is likely to shift. Investors who understand the fundamentals will see XRP not just as a crypto asset, but as part of a growing financial infrastructure. That shift in perception can create a strong base for price appreciation that is grounded in real-world demand rather than hype-driven pumps. It's also worth noting that Ripple's ecosystem-focused approach reduces certain risks. Unlike companies that operate independently of their token, Ripple aligns its business success with the success of XRP. Every product launch, partnership, and regulatory engagement strengthens the token's ecosystem. For holders, this alignment increases confidence that strategic decisions are being made with long-term utility in mind rather than short-term gains. Finally, looking ahead, we can consider multiple scenarios. In a high-adoption scenario, regulatory clarity arrives, major institutions deploy XRP at scale, and Ripple continues building infrastructure. In that case, XRP could see sustained growth in utility and network value, potentially attracting both institutional and retail attention. In a moderate scenario, adoption happens more gradually but steadily, with incremental wins in tokenization and treasury integration. Even here, long-term holders benefit from compounding network effects. In a low adoption scenario, regulatory delays or unforeseen challenges slow growth, but Ripple's fundamentals and infrastructure focus still provide resilience compared to projects without real-world utility. The takeaway for XRP holders is clear. This is a long-term game grounded in adoption, regulation, and real-world usage. Short-term volatility will occur, but the structural drivers are what matter most. By focusing on regulatory developments like the Clarity Act, institutional partnerships, and the utility of XRP in Ripple's ecosystem, you can gain a more accurate perspective on potential outcomes over the next year or two. The next step is to stay informed, watch adoption metrics, and recognize that XRP's path is fundamentally different from most other assets in crypto. After analyzing Ripple's strategy, Brad Garlinghouse's statements, regulatory developments, and institutional trends, the conclusion is clear. XRP is uniquely positioned in the crypto landscape because it is utility-driven, regulation-conscious, and institution-ready. Unlike many assets that depend purely on hype or speculation, XRP's growth is rooted in real-world financial integration. The first key takeaway is regulatory clarity. The Clarity Act, if passed or even partially advanced, will remove a major source of uncertainty that has held back institutional involvement. Brad's prediction of a 75% probability of meaningful progress by the end of April is significant because it reflects direct involvement at the highest levels. When regulations are clear, large financial players can operate confidently. This is what differentiates XRP from many other tokens. The asset is not just about trading, it's about being used within systems that manage real money flows. The second takeaway is adoption by institutions and strategic partnerships. Ripple's collaborations, such as the tokenization of Aviva Investors' products on the XRP ledger, show that this is more than theoretical. Institutions are beginning to use XRP for actual business processes, which create sustainable demand. These partnerships signal that XRP is being recognized as a legitimate financial tool, not a speculative gamble. Over the next 12 to 24 months, this adoption is likely to accelerate as regulatory clarity increases and more firms explore on-chain efficiency, liquidity, and tokenization. Third, the network effect of XRP is becoming more apparent. Each new adoption, each new integration of XRP into Ripple Payments, Prime, Treasury, or RLUSD increases the overall utility of the ecosystem. Unlike projects where the token is an afterthought, XRP is central to Ripple's strategy. This means that growth is compounding. The more XRP is used, the more value it creates for the network, and the more incentive there is for further adoption. Real usage drives long-term value in a way that speculation alone cannot. Another critical point is the alignment between Ripple's success and the XRP ecosystem's success. Brad emphasized that Ripple wants to build products that customers love and pay for, but always in service of the broader XRP ecosystem. This alignment reduces risk for holders because the company's incentives are tied to the growth and utility of the token itself. When a company's business model directly supports the token, long-term fundamentals become much stronger. Liquidity is also a major factor to watch. XRP is designed to be a bridge asset, facilitating fast, low-cost value transfers. As more banks and institutions integrate XRP into payment and treasury systems, the demand for XRP for operational purposes will increase. This is fundamentally different from assets that rely primarily on speculative trading. The network's growth is driven by necessity, not emotion, which is why XRP can be considered more resilient than many other tokens. Looking at potential outcomes, we can see a clear framework for the future. In a high adoption scenario, regulatory clarity arrives, institutions scale their use of XRP, and Ripple's infrastructure expands. This creates exponential growth in both utility and network value. Even in a moderate scenario where adoption progresses more slowly, the token's fundamental role in treasury, payments, and tokenized assets provides a solid foundation for long-term growth. And even in a slower scenario, Ripple's strategic positioning, regulatory engagement, and infrastructure focus provide a resilience that few other projects can match. For XRP holders, this perspective means focusing on signals that matter: regulatory progress, adoption by institutions, integration into real-world financial systems, and utility-driven growth. Price alone is not the leading indicator here. It's a reflection of adoption, infrastructure, and trust in the network. By monitoring these factors, investors can make informed decisions based on fundamentals rather than hype. Finally, Brad Garlinghouse's statements reinforce a bigger picture. Ripple sees itself as part of a financial ecosystem where XRP is central. Everything from payments to collateral, from treasury management to tokenization, is designed to increase trust, utility, and liquidity for XRP. This strategy positions XRP not just as a crypto asset, but as a fundamental building block for real-world finance. It is rare to find a crypto project with such clear alignment between corporate strategy, regulatory engagement, and network utility. In conclusion, for anyone in the XRP community or considering entry, the key is perspective. Focus on long-term drivers: regulatory clarity, institutional adoption, product utility, and ecosystem alignment. These are the forces that will shape XRP's trajectory over the next 12 to 24 months. Short-term volatility will happen, but the underlying infrastructure and strategy provide a roadmap for sustainable growth. The current phase could very well set the stage for a significant expansion in both the use and value of XRP, making this a critical moment for holders to understand, observe, and position themselves wisely.